Ren, is this thing on? Is
Yeah,
it
yeah, bro, I
working?
can see you.
Here we go.
We're live.
Cheers, mate. Afternoon beer
Cheers.
discussions with equity mates. We are live. First intro into video for us, which is a massive, considering we're usually behind the mic and have been for the last 4 years. So something new for us, Ren.
Yeah, something new. No microphones and cameras for the first time.
Yes. So I think welcome to anyone who's joining us for the very first time who's not already in the Equity Mates community. Alec and I, who I will be referring to as Ren from here on in, met at university somewhat 4 or 5 years ago and started, well, maybe more than that, sorry, Ren, 10 years ago?
Yes.
Yes. And started Equity Mates Investing Podcast as a way for us to break down the world of investing and understand the markets and make them more accessible for you guys. So we've been doing the podcast now for about 4 years and have a community of everyday investors now on the journey of learning to invest. But we decided we would take the opportunity, being locked down, to explore video and chat about markets over a beer. So here we are with afternoon beer discussions.
We've had so many Zoom calls and WebEx calls and all of that we figured, why not add another one to the mix?
Absolutely. But this is the best one of the week, then.
Well, let's see how it goes.
True.
So
what are the rules?
The rules of this are very simple. It's an afternoon beer discussion. We're going to catch up on what's happened in the world of investing or in the markets today over a beer. But
Yes.
The rule is it's only one beer, the length of one beer.
Yes.
So once either of us... You go.
I was going to say, I've already broken the rule. I've got a wine.
Not a great start from you.
Not a great start. The reason being I forgot we're actually doing this today and last minute had to hustle and get the wine. So here we are. Second rule is, Ren, that we will only be discussing between 1 and 2 topics.
Yes.
You are known to gas bag a little, so I'm looking forward to this.
That's why it's the length of one beer, because if either of us talk for too long and the other one's just drinking, then it's over. And the rule is, as soon as you finish a drink, you hang up.
Valid point, yes. So if I disappear. Well, I guess we should get stuck into it, Ren. I think you've got a bit of an update for the markets today.
So I guess as a bit of a preamble, and this is the start of me really gas bagging, I guess. We're doing this because it's a new medium and we've got the time to do it while we're locked down. We want to hear what topics you guys want us to discuss. It's a little bit different from the podcast format. It's going to be shorter. It's going to be sharper. And hopefully. So we can hopefully. So we can talk about different things. Today, we're just going to talk about what's happened in the markets and a few companies that we've been watching or that have caught our eye. Apparently, you've got a surprise for me as well. I have no idea what it is.
This is true. Yes.
I can see from the look on your face that you actually forgot that you had a surprise. Just like you forgot to get a beer for afternoon beer discussion. So we're off to a really strong start here.
You're right, Ren. I do have a surprise for you. For those of you that have been following the show, you will remember that the last few episodes, we have had to be recording in our respective houses. We're unable to get into our studio, which has been a problem for our audio and acoustics. And you will know that Ren has been recording underneath a blanket.
Yes.
Well, the good news is, Ren, that one of our very generous listeners who runs a sound acoustic business has actually written in and is donating 2 soundboards for us to have at home, which we can get our logos printed on. So they're big 600 by 1.2 meter soundboards that you can sit behind your microphone to absorb all the sound. So
that's great.
Yes.
Can I put it under my blanket?
I mean, you can try.
Yeah, okay.
Defeats the whole purpose. But anyway.
Well, I mean, we should say this. We should give a shout out to the listeners' business.
Yeah, so the listener's business is, bear with me 2 seconds here, Ren, while I
All
get
right.
it.
Well, while you're looking it up, I'll just say that if any other listeners want to send us free stuff, we'll also give you a shout out as well.
So this is from Matt, who owns iSorb, a thermal and acoustics business. That's ISORB. So have a look on Facebook if you're after some audio and acoustic engineered absorbing material.
Nice one. That was a good surprise. I like it.
Yeah. So anyway, moving on.
So markets and companies we're watching is what we're going to talk about today. So
Yeah.
obviously, everyone is self-isolated. Well, most people are self-isolated, and the markets have been very much down and then back up. We saw the Australian market fall about 30% in a month, and then it's rebounded pretty strongly from there. So today it was up, another 1.9%.
Yeah.
So continuing that grind upwards. Any particular companies that you've been watching or anything that's caught your eye?
I'll quiz you, knowing what went up the highest in the 200 today, ASX 200. Obviously, volatility is still very much in the markets at the moment. We're seeing some significant swings all over the shop. Do you have a guess on what one of my companies would be?
Yeah, I know, because the only reason that you would be asking me this question is if it's one particular company that you've had a little man crush on for a long time and I haven't been a big fan of. So I'm guessing the biggest winner of today was Afterpay.
You got it, Ren. You got it, Ren. Yes, shareholder of Afterpay. And I've written it up, wrote it back down. I think it went from close to $40 down to $9, Ren, over the last couple of weeks, and has since seen a pretty significant rally, up 29% today. And
wow.
that wasn't just because of the volatility in the market. They came out with third quarter revenue, underlying sales, and it has doubled compared to this time last year, up 97%. So
Wow.
whilst the COVID-19 is having impact on some businesses, Afterpay over the last few months has continued with its strong momentum. They've also...
It probably, the coronavirus stuff probably just wasn't in this reporting period.
That's right. However,
it's definitely going to have an effect.
You would think so. I think, though, that one of the advantages is that they are, playing the online space, and a lot of people at home are sitting online buying stuff at the moment. So it could play to their advantage. Time will only tell, but they have tightened up their business model somewhat since COVID-19 has hit by putting spending limits on, and Australian customers are now expected to pay the first instalment of their payment up front rather than the delayed 2 weeks that it usually is. So they are taking the credit side a bit more seriously, I guess, or tightening it up a little just to make sure that their default rates don't kind of get out of control. But yeah, that's I was very happy to see plus 30%. But as I said, volatility in the market at the moment, anything's possible. What about yourself?
There you go. So one company that I actually messaged you about this morning and did a little bit of a write-up for something that we're looking at for Equity Mates, that had a great day today, not as good as Afterpay, but pretty good, was Katmandu. The outdoor specialty retailer was up almost 14% today. And this company has been on my watch list for a little while because it is trading, it's cheap. The market has beaten it down and it is looking very interesting. It's trading at a price to earnings of 4, which is
ridiculously cheap. Yeah.
And it's in the last 52 weeks, its high was around $2.50, and it's now trading, or this morning it was trading at 62 cents, and now it's trading a bit above that. But it's beaten down for a number of reasons. Obviously, retail is struggling, despite your unbelievably optimistic assertions about Afterpay. Retail is going to struggle with all of its stores closed. It shut down all 162 stores, stood down its full workforce in Australia and New Zealand, except for a few head office staff. It's selling online, but not in any of its stores. And also it's doing its third capital raising in 3 years, which isn't a good sign for existing shareholders. It means that the company is selling more shares to the market, which dilutes the existing shareholders. So there's a number of reasons why Katmandu is down, but it was trading so cheaply that it got on my radar. And for me, I look at Katmandu as kind of immune from Amazon. Like, we both work in retail and there's a lot of fear around Amazon, but I think specialty retail and supermarkets have some good advantages against Amazon. And you look in the US where Amazon has destroyed so much of traditional retail, there are retailers that are still doing really well. Home Depot, which is sort of the analogy over in Australia is Bunnings. I think will do quite well still. And then the outdoor retailers, so things like Bass Pro Shops in the US or Katmandu in Australia, I think they just have some advantages that Amazon can't replicate. That Katmandu has a lot of Katmandu branded stuff that people want to buy, like its brand is strong. And knockoff Amazon products don't really compare in the mind of consumers. I also think a lot of its products are stuff that people probably don't want to buy online. They want to touch it and feel it and try it on. I don't think I'd be buying a tent online. I don't think I'd be buying hiking boots online. Stuff like that gives it an advantage in terms of the products it sells. And then also some of this specialty retail, you want to speak to the salesperson who can give you some advice and give you some expertise, I guess. And so I think Katmandu is an interesting one.
I remember when we were at university and then sort of finished uni in 2015, 16, thereabouts. And it was a stock that was really getting battered around from a price point of view. There was a lot of media around the fact that it was done and dusted. They weren't able to compete. It seems sort of since then they've managed to get their mojo back a bit. I don't know if there was a bit of a rebranding or what was going on, but are you kind of seeing that in their figures?
So their revenue numbers and their profit numbers seem to be slowly grinding up. I think in the last 5 years, the revenue has grown at an average of about 7 or 8%. And their profit in a similar vein, around the 7 or 8% mark. So you're right, the share price has been all over the shop, but the underlying business numbers seem to be looking okay. So look, I haven't bought it. It's one that's on my watch list. We actually should have said at the start, everything we talk about here is just us talking about what we're thinking about. We're obviously not giving advice. We're two idiots sitting at home having a beer and talking stocks. But interesting one for me to think about, for me to look at. And
I don't know if you've gone into this much depth with your analysis and research yet, but I like the fact that you're calling out the specialty retailers. As you know, over the last few episodes we've done it in our mastermind episodes where we pitch, 3 stocks with an expert, Julia Lee. A few of those stocks have been in the specialty retail space, and I'll get to them in a second. But you started out by saying retail's dead, bricks and mortar gone, given the circumstances. Do you know anything about Katmandu's online presence? Has it been a strategy of theirs? Where are they sitting?
I haven't looked too much at their online. I know it's a part of their business because they're keeping it open now. I can't imagine it's a big part of their business, but I couldn't tell you how big or how small. Yeah.
Well, I like the city. I like the special. I like the specialty.
Jumping ahead there, mate.
I like the specialty retailer space because 2 stocks that we've had our eyes on at Equity Mates: City Chic, which is an online retailer at the moment. They do have bricks and mortar, but very heavily online. Plus size women's lingerie, and also Baby Bunting, which we know has been a stock that we've had our eye on for sort of over 12 months now. specializing in baby products. They
I'm just
also
noticing you have a real trend between Afterpay, City Chic, Baby Bunting, and then one that you didn't mention, you may have been getting to, JB Hi-Fi, another one that you spoke about recently. It seems like you've got a one-track mind for retail.
Bro, the whole idea of investing is investing within your circle of competence. I work in retail.
Well, given that I haven't given that I haven't bought clothes for, I don't know, 5 years and avoid Westfield like the plague, retail is definitely not in my circle of competence.
Well, when we start a fund, I'll take charge of the retail arm. And but look, if you do put me in charge of the retail arm, City Chic, the specialist, and also Baby Bunting specialist, since the lows of when we were at a low 23rd of March in the ASX, City Chic is up 156%.
Jesus.
Yeah, up 13% alone today. And
Wow.
Baby Bunting's up 76% since the lows in March. Now,
Wow.
that's not to say that the
Did you
market as a
buy?
whole. I haven't bought either of them since the low. No. But it just goes to show, I think, these businesses were both good businesses before all this sort of stuff went down. And it looks like people are jumping on board. So definitely going to be keeping an eye on those.
Yeah, nice.
But I like the concept of specialty because you're right. It certainly creates a bit of a moat in these situations. And both businesses also have a very strong online presence and have done well in establishing that online presence over the last couple of years. So absolutely sort of making the most of it at the moment.
Yeah. I mean, it's an interesting, this is getting, I guess, a bit away from investing and into retail chat, but let's just say where it goes. It's an interesting conversation that's happening about the future of online retail. And it really can be pitched as a battle between Shopify on one hand and Amazon on the other. And Amazon is this business that tries to centralize as many sellers onto its marketplace, and it hosts its own products, but also a whole range of third-party sellers, but it owns the marketplace. And then the other model for what the future of online retail could be is the Shopify model, where Shopify enables individual online retailers to create their own stores, not in any big marketplace, but on their own website and stuff like that. And it'll be interesting to watch if online retail goes down the, I guess, call it centralization with a big like Amazon marketplace where the sellers want to meet customers where they are because so many people are on Amazon, or if it goes down the fragmenting route where, individual brands, kind of like City Chic, get their own niche audience and then sell to that niche audience, and then customers find brands that they like and then buy through those particular brands outside of, those big centralized marketplaces. And obviously Amazon's doing very well, but there's a lot of sort of niche or fragmented brands that are doing quite well as well. And it'll be interesting to see how the online retail market continues to develop.
Absolutely. I remember last year at some point, I'm just trying to look it up now, but Nike actually ditched selling on Amazon. They felt like they just didn't need the platform.
Yeah, it is interesting.
So that was interesting.
Now, mate, I've almost finished my beer. So do you have any other... Mate, you're not even drinking a beer. Do you have any other stocks that caught your eye?
No. I think the market's recovering actually pretty quickly compared to what I thought it would. The big question is, are we in for another drop? And I think we'll do an episode on the whole bull trap, where are we situation. But
nice teaser. Yes,
yeah, we'll
coming
do
out
that.
Coming out next Monday.
Yes, depending when we release this video, but but otherwise, no. Anything on your list?
Worst performer of the day, Webjet, down 9.9%, meaning it's down 76.9% for the year.
Oh.
Yeah,
now the classic question would be, it's down so low. I mean, it's got to be a good buy, but we'll leave it up to you guys to figure out.
Sorry, mate, I'm done.
Oh, you're out of here. Well, it's good to... Ren's out. He's closed his camera. I guess that's it for the first of our Equity Mates beer discussions. Hopefully you can join us again when we get back on. If you aren't part of the community, you can find us at equitymates.com. We have our flagship podcast, which is Equity Mates Investing Podcast, as well as a 12-part series on the fundamentals of investing called Get Started Investing. So both of those are in your podcast feed at the moment. Otherwise, you can join us on Facebook at Facebook, or Instagram. So thank you, and we look forward to chatting soon.